Breaking news on Martyn Lucas Investor. Thanks for nothing, FCA. How the UK crypto regulation keeps falling behind. I'm going to be covering that in this video. Crypto is just going to all-time highs every single day, and the FCA is still calling it a scam. There is new regulations coming in place from 2026, so only about 5 months away from even more new regulations. So do stick to the end of this video as I'll be explaining what it means for you and the full information. I've put this into today's newsletter. The newsletter link is the first link in the description. Every single morning, the 5 things you need to know, plus the deeper dive. If you're investing in the markets, crypto, you want to know the news, we bring out the news to you every single morning. 4 hours of research every single morning for you guys. But today's deeper dive story is thanks for nothing, FCA, how UK crypto regulation keeps falling behind. Regulations, and then you look at the US, which is just doing much better than the UK. The UK approach to cryptocurrency regulation has become a masterclass in how frustrated retail investors while competitors race ahead. As American pension funds load up on Bitcoin ETFs and European exchanges follow crypto exposure, British retail investors remain locked out of the most basic cryptocurrency investment vehicles, leaving them watching from the sidelines as digital asset revolution unfolds. This is what I did my X post about today. Go and check out my X. It's in the comment section and in the description. Do you feel protected? Do you feel protected? Because the FCA banned retail ETF access in 2021 at 8,000. We're currently around 86,000. So I'm not thanking the FCA. They're not protecting anyone. I don't know. They're protecting themselves. It seems like it's frustrating because they're treating it like it's gambling, and we very much now know that they were wrong. And this is an investment that's going to stick around forever. Remember, nothing I say is financial advice. It's my thoughts, my opinions. This article is also my thoughts and opinions. So please, this is a critique article from my opinion, so do take everything with a pinch of salt, and I'm not a licensed financial advisor, and please do not base any trades based on anything I say. As American so British retail investors remain locked out of the most basic cryptocurrency investment vehicles, leaving them watching from the sidelines as digital asset revolution unfolds. And we've got even a bigger story coming up in just a few paragraphs, where we've got the CARF surveillance state. We've got from 2026 some new massive regulations coming into place, which is not going to make anything better, just worse. The Great British ETF lockout. The root of this regulatory mess traces back to January of 2021, when the Financial Conduct Authority, the one that works for us, imposed sweeping bans on crypto derivatives and exchange-traded notes for retail investors. Brilliant. The FCA claimed crypto assets had no inherent value, and that the retail customers could not reliably assess the value and the risks. At the time of the ban, Bitcoin was trading around 8,000. As of July of 2025, it's near 86,000. A tenfold rise that retail investors were protected from assessing via regulated products. So I just find it ridiculous. I mean, where's the gambling bans then? If you're going to say it has no inherent value and there's big risks, then why is the gambling industry not regulated like this? You can go gamble, lose all your money, not that many regulations in place, and you can walk away tax-free. If it was gambling and it had no inherent value, that I just don't understand it. It's just ridiculous in my opinion. And that was at 8,000, calling it a scam, just like most other people, but actually putting regulations in place, not letting it be in ETFs. We've got that in the US. It basically means we can't have it in our ISAs. We don't have a safe way of investing in it. If it was in an ETF, we would be protected much better. But what they've done is just completely doesn't make any sense, because they're saying they're trying to protect us. They're trying to. I don't want the FCA's protection. That's the first of all. In this specific place, I do think there should be protection. I do think they should go after scams. I do think there should be some warnings, some risks, but I don't think you should just stop allowing people to trade. I lost my train of thought, but Yes, I'll just move on because it's going to frustrate me at all a lot. Um, I was going to talk about the ETFs. If they were actually worried about the risks and they wanted to protect us, then they would allow ETFs for the major currencies, at least Bitcoin. Why? Because if you're trying to protect us from risk, you're probably going to tell us not to go onto this website. This website might be a scam. This exchange might be a scam, or whatever. If it's on the if it's an ETF, then we can just buy it on our ISAs, or we can buy it on an investment account, and we don't have to worry about the risk because they're taking on the risk, and we just pay a little fee. So it's just ridiculous because they don't even allow ETFs. The ISA and SIPP nightmare. Perhaps nowhere in the regulatory failure more evident than the treatment of individual savings accounts and self-invested personal pensions. Under current HMRC guidance, there is no route for getting direct Bitcoin ETF exposure in an ISA, and no such products qualify from UK UCITs or recognised investments. Remember, that's also ridiculous because if you want a diversified portfolio and you are a high risk investor and you're a young investor, then what you're doing is they're not letting you have a properly diversified portfolio, because Bitcoin and cryptocurrencies will be part of it, and they're not letting you have direct exposure. They're actually increasing your risk because you have to invest into companies that might hold Bitcoin, which just brings a completely different ball game into it. For SIPs, which is a self-invested pension in the UK, the situation is only marginally better but absurdly complex. Retail investors must first qualify for MIFID professional client status, bureaucratic, I can't even say the word, hurdle requiring significant assets or professional experience. Even then, you need to go to you need specialized SIP administrators like options pensions to assess Bitcoin ETFs through interactive brokers. So, um, ridiculous once again. This system has created a two-tier market where wealthy, sophisticated investors can access Bitcoin through pension wrappers, while ordinary savers are shut out. The result: retail investors have been forced into workarounds like buying MicroStrategy shares or crypto mining stocks to gain indirect exposure, where the risks are higher, by the way, because you need to understand balance sheets. You're investing in an individual stock. You're not investing in the underlying asset, which is normally less risky, all that sort of stuff. So, complete, utter embarrassment from the UK once again. The US contrast: freedom versus paternalism. Since January of 2024, American investors have enjoyed access to spot Bitcoin ETFs, including 401ks and IRAs. I need to make a note that the US was late as well. I mean, I'm talking about the UK as if they're the worst country in the world, but we need to remember the situation was pretty much the same in America a couple years ago. Maybe slightly better, but still pretty much in the same situation. So I'm not here bashing the UK. I still think it's a great country, and all the other things, the freedom and everything else. But it's time to wake up, really, because they're not protecting anyone, in my opinion. The iShares Bitcoin Trust IBIT charges just 0.25% annually, while UK investors typically face crypto exposure fees exceeding 3%. So once again, that's not helping at all. Americans can buy ETFs with pre-tax dollars, gaining both crypto exposure and tax advantages UK investors can't access. Completely different. US, there's a lot of competition now, lots of ETFs, everyone wants to have the lowest fee. You can just go and buy a Bitcoin ETF and pay a 0.25% fee and be pretty protected. In the UK, you have to be wealthy, you have to go through specific channels, you have to, the fees are very high, you have to call this pension administrator. There's no easy way, as in pretty much there's no way of getting Bitcoin or crypto into your investment vehicles. And here we go, 2026, it all gets worse. The CARF surveillance state. Adding insult to injury, the UK is implementing the Crypto Asset Reporting Framework, CARF. If you are enjoying the video, please do hit the like button. Let's see if we can get to 500 likes on the video. Subscribe if you haven't done so already. I've noticed that about 80% of the people that watch the videos do not subscribe, and I think I've got this image saved. There we go. Look at that. Not subscribed. 90% of you guys. What is going on? Please do consider subscribing. We bring all the real, honest crypto finance news to you guys. And we are currently on 88,656 subscribers. We're trying to get to 100,000 by the end of the year. So let's see if we can get it done. Let's see if by the end of this video we're up to 89,000. The special number apparently, according to Martyn, is 88888. So let's see if we can do that as well. So let me get back into this CARF surveillance state, because this is happening quite soon now. Adding insult to injury, the UK is implementing the Crypto Asset Reporting Framework, CARF, from January of 2026. This OECD initiative requires crypto exchanges to collect and report detailed personal information about users, including names, addresses, tax IDs, and transaction details. The government expects CARF to increase tax revenues by 315 million over 4 years, a figure that reveals the substantial crypto activity they're simultaneously trying to restrict. HMRC has identified 50 reporting crypto assets providers and estimates compliance cost of 800,000 annually. While enhanced tax transparency isn't inherently problematic, the timing is particularly galling. The same regulators denying retail investors access to regulated crypto products are building sophisticated surveillance systems to track their every transaction in an unregulated market. So they're not helping, but they're making it harder. I think every single exchange will have to adhere by these rules, otherwise they'll be charged £300 per user. So they're obviously going to have to do it. That will probably mean a lot of costs for these exchanges. So again, that could drive exchanges out, once again making it a more risky market and less competition. So again, the UK investor gets hurt the most, because exchanges can increase their fees, and if you don't have competition, you know the problems with that. Secondly, it means that every single exchange is now going to be reporting on all your transactions. They're going to be taking all your details, which raises questions about the amount of surveillance going on in the sector, even though they're not making it easy for us. And that's going to all happen from January of 2026. So be prepared to that. Another way of trying to pinch some pennies. Industry voices, but I would always say pay taxes anyway. It just makes it. I'm just having more of a problem of how seriously they're taking the taxation side of things, but they're not. They're not making it easy to invest in the market. Some industry voices, and they're also killing competition as well, making it even worse for UK investors. Industry voices, the criticism mounts. The official monetary and financial institutions forum and the UK Parliamentary Treasury Committee has criticised the UK's delays and lack of clarity, driving crypto firms overseas. The FCA's crypto roadmap still lacks to go live date, exacerbating uncertainty. Meanwhile, firms and experts accuse the UK of policy procrastination and losing its leadership in distributed ledger finance. A glimmer of hope, potentially. In June of 2025, the FCA announced it would lift the ban on crypto EMPs for retail investors, though full Bitcoin ETF access remains unavailable and implementation is unclear. The FCA executive David Glee stated the regulator aims to rebalance our approach to risk, but for many retail investors, the shift feels too little too late, and it is, because we haven't heard anything since either. So here we go again. More FCA rules, more FCA bans, more FCA compliance, and no help to the retail investor once again, while other countries... What happened to the UK being the crypto global hub? It doesn't look like that's happening. And while that's going on, we're looking at cryptocurrencies. Currently, XRP trading at $2.65. We've got Bitcoin making all-time highs as we speak as well, around 118,000. So crypto market is booming, and once again, the UK investor is being left behind. If you did enjoy the video, please leave your comments down below. The first link is the newsletter. Please do go subscribe, check out the X, and until next time, there'll be 2 videos up here. Take care of yourselves and each other.